Hey traders, it's John Fortune here with this week's weekly Forex forecast. First and foremost, happy 2023 to all of you. There is an update to the weekly Forex forecast this year, and we're using more sophisticated analysis than we have been using previously. So instead of the support and resistance levels that we were using before, we're using areas now which are more accurate on a week-over-week basis. So I hope you enjoyed today's new look in the weekly Forex forecast. A quick look at the economic calendar as always, and next week we do have Chairman Powell speaking on Tuesday. However, the big piece of data to be paying attention to is the CPI print out of the US on Thursday. Now, the CPI has been the main driver of market moves, and it never used to be like that with CPI when it was down around 2%. Very often this would pass pretty uneventfully, but since we moved into an inflationary regime, this has actually taken precedent over other pieces of data. I do think now, as we're starting to see CPI come down, we could see non-farm payrolls beginning to be the priority for traders as traders look to start to see if they can find cracks in the labor market appearing. Now, of course, we had non-farm payrolls last week, and we actually saw the unemployment rate tighten with a decent jobs report as well. However, just bear in mind, we did just have Christmas, seasonality plays into this, and as the tightening policy of the Fed starts to take hold, we will see the unemployment rate start to rise and we will see the labor market soften. That is the goal of the tighter monetary policy from the Federal Reserve. It is to soften the labor market, which at the moment is fairly robust. If you're looking at the lagging data, which of course non-farm payrolls is lagging data. The big macro story from last week was the ISM services, which came in at 49.6. This means we now have manufacturing in the US projecting contraction because ISM is forward-looking, unlike the jobs data. And now we also have the services sector, which is the biggest sector in the US, in contraction territory, forwards looking. And that was one of the reasons we saw the DXY selling off last week, because usually when services PMI and manufacturing PMI is below 50, we see the Fed pivot. And that is why we saw the DXY selling off, as well as the fact that the DXY was very overextended going into that piece of data. Those were the two reasons we saw the DXY sell off, and we saw a bit of risk on coming into the markets off the back of this. So that is the key piece of data that came out last week. And coming out this week, it is the CPI data that you want to pay attention to on Thursday. Just bear in mind, the markets may be a bit subdued leading into this, and this actually may catalyze the next move in the dollar pairs and also some of the other pairs because of the global reserve status of the dollar. Okay, so quick look at the scorecards heading into next week, and the scores here on the right hand side and the left hand side are the same, so there's no net change showing here because this is the first video of the year. However, what we can see is the Japanese yen is still the best long position to the upside, followed by the euro. And to the downside, there is actually less edge, less probability in the downside for the pound, the New Zealand, the Swiss franc, and also the CAD and the Aussie, because you can see these are not, firstly, they are not at -2 or more, which is when we get a bearish signal. And the Japanese yen actually is the only currency outside of this two bound. So +2 bullish, -2 bearish. So everything else is kind of bullish to neutral or bearish to neutral. So the first takeaway of this is that the probabilities are telling us not to take too much risk because there is not a huge amount of edge in the markets as it currently stands. However, I do favor going into next week euro and Japanese yen longs vis-a-vis the pound, the New Zealand, and also we can look at the CAD and the dollar, because the Swiss franc, I'm going to show you when we look at the individual currencies why I'm a bit hesitant to short Swiss franc next week. So we'll be looking at pound yen to the downside, New Zealand yen to the downside, CAD yen to the downside, US dollar yen to the downside, and also euro pound to the upside, euro New Zealand to the upside, euro CAD to the upside, and also euro dollar to the upside as some of the best markets heading into next week. Okay, so let's have a look at the individual currencies on the daily chart here just to get the bigger picture view as usual. Now, the dollar did break out with some momentum of this kind of falling wedge pattern. However, at the end of last week, as I said, when we got the ISM services data out especially, we saw that sell-off. Why? Because A, it was overextended going into the data, and B, the Federal Reserve, as I said, historically tends to pivot when the ISMs are both below 50. Now, is that going to be the case this time is the big question, because inflation is still currently at 7%, and next week it's probably still going to be over 6%. So if the Fed does pivot with 6% inflation, even 5% inflation, the problem with that is it is going to reaccelerate. Inflation doesn't magically come down. It will reaccelerate if the Fed pivots, if it starts to stimulate once again. And so the greater probability, especially if the labor market holds up, is that the Fed raises rates and it holds rates higher for longer, which is exactly what it has been saying it's going to do. So going into next week, the dollar is actually neutral. In fact, it hasn't really gone anywhere since December of last year. And because we're at the start of the year, it is going to need a little bit of room to move and start to actually break out of this consolidation. Going into next week, however, I would not be surprised to see the 102.992 be tested. This is the major breakout of the dollar index. And I do think we see the dollar higher this year, especially as we get risk off coming into markets. But it does look like the dollar may need to weaken a little bit first before we get any further upside. And as I said, look out for this test of the 102.992 because that is a major resistance area which was broken, which looks now like it's going to be tested as support. Next is the euro. Now the euro is sitting at the 4-year breakout highlighted in videos at the end of last year. However, if the DXY is going to come down and test the major breakout level, I do think we see the euro slightly higher. Do we get a bigger breakout above this level with momentum? Remains to be seen. As I said, it looks like there's only a little bit of limited downside in the dollar if it is coming back to test that major support area. So I do think we see the dollar higher next week. However, I do think upside near term in the euro is capped. Next is the pound. Not too much to say about the pound. You can see we did have the big rally after the flash crash, which is exactly what you would expect after this kind of flash crash. We are starting to potentially form an inverse head and shoulders. However, you can see this has, again, like a number of these markets, really hasn't gone anywhere. It's just been consolidating. So needs a little bit of time to find direction. I wouldn't be surprised to see this maybe even coming back and retesting the highs if the DXY does come down, as looks likely, to test the major breakout area of the 102.992. And so maybe a little bit of near-term strength, but it looks like it is now starting to make its way down. And we could very easily be seeing this coming back to the lows in a bigger risk-off environment this year. Next is the Swiss franc. Now the probabilities from the scorecards are telling you that this is kind of just a neutral market. However, if we look at this technically, we can see we did have the major double bottom breakout with the huge momentum, which I highlighted in a number of videos at the end of last year. And what we have now is we are sitting at broken resistance, major broken resistance, turning support. So perhaps this consolidates a bit more. This could easily consolidate for another week or so. The risk is shorting this means we could be on the wrong side of a major breakout to the upside. So although I'd rather get really long in the Swiss franc once the scorecards show me and tell us, yes, this is now a bullish currency in all probability, for the time being, I am going to be avoiding shorts in the Swiss franc based on what we're looking at here. Next is the yen. We did break out of this inverse head and shoulders. We came back, tested it, and now we're making our way towards the 0.00799450. This was the major breakout highlighted from last year. And I would be expecting this to consolidate and at least come back and test this. This will be the deciding point really for the yen. Do we consolidate here and start the next leg down? Or do we break through here with momentum, in which case that would set up a potential test of broken resistance turning support, and that would actually signal potentially a much bigger and in fact a major reversal in the Japanese yen this year. Canadian dollar, you can see this is just a really choppy chart, and I have been highlighting the fact that this should be considered just simply a big bear flag. The question is this the start of the next leg down and we retest the low, or are we going to come back for a bigger, this is simply an A, a B, and then we come back for a C wave and test the high. Now, really this just underscores technically what the scorecards are saying as well, that the probabilities are this market is just corrective and ranging. It's not really bullish and it's not really bearish. In fact, it's just kind of bearish to neutral. Aussie dollar, we have been testing the highs here and lacking momentum. And going into next week, you can see there is some strength in this market. This is the previous high. So any correction as it currently stands is still viewed as a correction of a much larger downtrend. And this downtrend is still intact with lower lows and lower highs. However, again, upside in the Aussie may just be limited to the DXY coming down and testing the 102.992, which we looked at earlier. So I do think we get risk off this year. However, it does look like we may get a little bit of risk on to start the year as the DXY sells off and as some of these markets continue to correct higher. And finally, we have the New Zealand. Now, the New Zealand is quite a telling market, and this is because the downtrend is still intact first and foremost. However, I highlighted the big rally we've seen in the New Zealand dollar, 17% in 9 weeks. And this basically, as I said to you previously, tells me that upside is now capped in the New Zealand. So is this the absolute high? Probably not. Again, if the DXY corrects a little bit to begin the year, I would not be surprised to see this come a bit higher, maybe even test the previous high. But upside in this market seems limited. And once we start to get in these areas of the previous highs, I do think we could start to see this rolling over because of the move we've had so far since the low back in September, October. And if that's the case, this would fit in with what we discussed in the dollar index, testing the major breakout level and then potentially finding a bottom. But for now, near term, it does look like we're going to get a little bit of risk on as the dollar sells off a little bit more next week. Okay, so let's have a look at the markets themselves, starting with crude oil. Now, with the CPI print next week, I do favor the commodities. I like to do that, go into the commodities to look for opportunities when we have those big news events like an interest rate decision like CPI, because they're less affected by those events. They're still affected, but less so than the Forex pairs. So I really like crude oil going into next week, and this is one of my favorite opportunities. Any pullback in crude oil, and you can see we have a really nice breakdown, a double top over here. Any pullback, especially if we retest the low over here, I am going to be looking for bearish setups down to the 69.50 area. Next is pound yen. We did have a rally at the end of last week, and it does look like we're still correcting, but any continued correction is simply viewed as an opportunity to look for bearish breakouts down towards the 156.50. Next is US dollar yen. We did have a sell-off in the dollar last week on the ISM data, and any pullback is simply viewed as an opportunity to look for bearish setups into the 129.50 area. Next is New Zealand yen. We are correcting after really selling off quite hard, first of all on the BOJ meeting, then the follow through. But any pullback in this market is simply just viewed as an opportunity to look for bearish reversals. And I'm going to be looking for shorts down towards the 82.2 area. Next is CAD yen. We have seen a little bit of strength coming in as we got some risk on. However, I do still favor shorts in this market. So any continued pullback, perhaps we come and retest the high, is simply viewed only as an opportunity to start to look for bearish reversals down towards the 96.25. Next is Aussie yen. Now, although US dollar yen and pound yen are my two favorite yen pairs going into next week, you can see Aussie yen is a market I highlighted in previous videos for the major head and shoulders breakout. And what's happened so far is we've come back and we've retested this level. And as it currently stands, we're just consolidating underneath this. And I did highlight previously that this was a major risk off sign. And it doesn't look, as it currently stands, like this has any momentum to the upside. So any continued pullback, even if we pull a bit higher, maybe test this high, I am treating this just as a potential A, B, and a C. And so I would favor short positions in this market, especially if we fail to break above the 90.847, that major breakout level. And I'm going to be looking down towards the 89 area next week. But I do think overall, if this is a big ABC, we are heading back down to the lows and very likely lower as we get more risk off coming into the market over 2023. Next is euro pound. Now, the two euro markets we have here, euro pound, euro dollar, they allow you to look for opportunities with either risk on or risk off next week, depending on what happens with the CPI print. Because euro pound to the upside is risk off and euro dollar to the upside is risk on. And we're looking at both of those. So you have a plan A and a plan B for some opportunities in the euro pairs next week. So any pullback in this market is viewed as an opportunity simply to look for bullish reversals up towards the 0.88850 area. Next is euro dollar. We did have some big momentum off of the sell-off last week in the dollar. And if we are coming down to the 102 area, 0.992 in the dollar, that major breakout area, I am going to be looking for further advances near term in euro dollar. And I do think on balance, we get a correction. We should be treating this as a potential right shoulder for a rally into the 1.07750. Again, just beware of that CPI print next week because it is going to dictate moves in the markets almost certainly. Next is Euro New Zealand. We are currently pulling away from the target, which is great. So any continued low, and if we test these lows and start to fail as well as a kind of range bottom, this is going to be a great place to start to look for bullish reversals into the 1.7010. Next is EurCad. Now we are in a correction of this bigger move up in EurCad, so I do favor longs. Any continued pullback is simply viewed as an opportunity to look for bullish reversals in this market up towards the 1.44750. And last but not least, we have EurUsd. Now this is one of my least favorite because as we're getting the sell-off in the dollar, the Australian dollar is actually benefiting from that risk-on environment, and that's why it's right at the bottom of the pile here. However, I am still bullish overall with EurUsd, and any test of this previous low, because as it currently stands, we have a bear flag. So I would expect this to come down and test the lows, but any reversal in this market would be viewed as an opportunity to look for bullish setups into the 1.5700 area. Again, with these markets, you don't have to wait for these to be taken out, but once we trade into these areas, these are profit-taking areas, areas that you really want to be out of these markets, because as I said, the odds are against you at this point. So wrapping up the video with gold, silver, and Bitcoin, starting with the gold-silver ratio, we are pushing higher in the gold-silver ratio, but the overall trend is down. So I favor silver long plays. However, I do quite like gold to the upside as well, anticipating potential weakness in the dollar. Just remember that CPI print has the ability to turn the markets next week, and you should expect volatility around that CPI print next week. Next is gold. Now gold is breaking to new highs, and we do have some momentum here. So any consolidation in gold is going to be viewed as an opportunity to look for bullish setups into the 1910.0. Next is silver. Silver is correcting away from the target, which is great. So any continued correction in this market is simply viewed as an opportunity to look for bullish setups into the 24.9 area. Last but not least is Bitcoin. You can see if we zoom out, Bitcoin has pulled back and retested the major breakout low of the 18144. So this is considered just simply a consolidation before the next leg down. Zooming back in this week, you can see any pullback in this market should be considered somewhat of a right shoulder, in other words, a lower high. And any pullback, I am going to be looking for a reversal, and I'm looking for bearish setups into the 15,850. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.